Let's get more into some of the technicals you should be watching, chart specific. Tony Sycamore from IG joining me on the desk. Good to see you as always, Tony. So we did see this fuel worries, I guess, a warning of a market sell off the banks, but the Nasdaq as well down some 2%.
Yeah, this is not the first volatility episode we've seen over the past month or so, and it just really comes back to the question is whether it's going to shake it off like it has done in previous episodes over the past month, or the Nasdaq rebounds. And the Nasdaq has been absolutely irrepressible. The rally there from the April lows, it has prompted all sorts of questions now starting to surface about the valuations. CEOs of Wall Street banks talking about the probability of a pullback, not unusual after we've seen a rally of this sort of duration. And then, of course, Michael Burry of the Big Short fame also putting out some cryptic posts. The shutdown, so many reasons for this pullback to play out. Now, whether it does, to me, will depend on whether the sell-off we saw last night extends below that horizontal support that you can see there in the yellow around 25,000, which is just below the uptrend support from the April lows. So if I were to see the Nasdaq break below there and then close below there, then I think we've got the green light for this pullback, which everybody has really been looking for and waiting for. Back towards 24,000, much below there, then of course we can trade into the mid 22,500 area. But while it holds above there, and there's been a couple of occasions, as we've said, where we've seen a little wobble, it's steadied, made new highs. We have to be aware that that is still a possibility while it holds above 25,000.
Absolutely. All right. Well, let's talk about our market because we were down about 0.5% yesterday, and then we saw the RBA hold, and then it dropped by almost 1%. But what are the technicals showing you about where we're at?
Yeah, it was a messy session yesterday in Asia, and the ASX 200, the bulk of the falls actually came ahead of the RBA's decision. It didn't help that they kept rates on hold and sounded less optimistic about rate cuts going forward. And I still think there's a point of inflection potentially looming when we see that October labour force numbers released in mid-November, about a week away. But regardless, in terms of the damage it's done to the ASX 200, it has been significant. It's broken below that uptrend support you can see there on the chart. And to me, it does warrant a deeper pullback, at least back to the lows we saw in September, around that 87.30 area, and if not, possibly lower in towards that 86.30 area, which we saw in late July. So I would need to see the ASX 200 get back above 8,900 rather promptly to negate that call. Until then, allow for this pullback to deepen.
And the Aussie as well. I mean, lower for a fifth session yesterday, but is it more likely to go back towards that 63 or push back towards 66?
Yeah, currencies are at a huge level here. The DXY index, the US dollar, which we watch, the Aussie you can see here, the euro. So many of these markets are approaching the 200-day moving average, which, as I've mentioned many times before, is my preferred indicator that I put on all my charts. And that comes in around 64.50 in the Aussie dollar. You've got some lows back there in August around 64.20. So this 64.50 to 64.20 is a huge support area. I've also redrawn the parallel trend channel there, which you can see it comes in around 64.50. As the facts change, then you need to be a little bit fluid with your technicals in some instances. And this is one of those instances. So 64.50 to 64.20, huge support. While above there, allow for a rebound. But if the Aussie dollar does crater much below that 64.20 area, then get out of the way because I think it can retrace back towards 63 cents rather promptly.
Do you get out of the way of oil as well? This OPEC Plus announcement over the weekend really playing havoc somewhat.
Yeah, it has. And then the risk aversion, which we've seen in markets, it looks to me like it wants to try and break higher because in terms of holding those year-to-date lows magnified by the yellow line there, you can see there's also a little inverted head and shoulders playing out there over the past 4 to 5 weeks. And I would need to see crude oil get above $63 to really trigger that. And then it doesn't go too far because not far above there is a 200-day moving average sitting up around 65.50. But for me, while it holds above those year-to-date lows, $55 area, you have to allow for this inverted head and shoulders to potentially play out. And then whether it can get above the 200-day moving average is another story.
All right, well, let's go to gold because a couple of weeks ago, we're talking about these lofty highs. Now it looks more like a pullback to around 3,500.
Yeah, and on a night where you would see risk aversion generally supporting gold, it wasn't the way it played out. And that suggests that the market is still long. And not only are we selling equities, we're selling everything to reduce risk, even our profitable trades like this in gold. Now, technically, I've spoken about this a couple of times. I want to see a 20% pullback after that run, which we saw. A 20% pullback pulls gold back into that 3,500 support area. So at this point of time, the higher US dollar, which we're seeing this move, I think, to cut positioning across all asset classes, probably plays out well to that effect. So looking for further declines here in gold back towards 3,500.
And then digital gold, I mean, kind of a bear market, really.
Well, yeah, it is. I mean, it's been something we've been looking for here. It was just a month ago we were making record highs up to 126,000, and then it all cruelly came unstuck October the 10th, and it really hasn't been able to get itself back above 117,000 with any sort of gusto. And yes, it's held some support coming at the 200-day moving average, but it cracked below there 2 days ago. There is a wonderful wave quality target coming from Elliott Wave sitting around 93,000. That to me is where I would like to see Bitcoin get to. I'd be watching for signs of basing around there as a potential setup to buy. But to me, if we are going to see, and it comes back to whether the Nasdaq is starting to see a deeper pullback, because if Bitcoin were to break below $93,000, $90,000, I think it would probably lead to a much deeper pullback back into that $75,000, $85,000 area. So a lot to keep, a lot of balls in the air at the moment, and we'll just wait to see where they come down over the next 24 to 48 hours.